It's almost like a festival in the Indian capital markets. LIC IPO's anchor book opens today and retail investors won't have to wait for too long. The issue opens on May 4th for retail investors and other categories of investors. LIC's DRHP was filed on February 13th. After that, there were two updated DRHPs which were filed, and finally the RHP was filed on April 26th. What changed between the DRHP and the RHP? Most important was that the government decided to reduce the stake which it was diluting through LIC IPO to 3.5% from the earlier stated 5%. It wasn't just the stake, but the valuations also came down. The revised valuations came down to about 1.12 times price to embedded value as compared to the earlier reported 1.85 times. What this did was LIC slipped to being the fifth largest company by market cap as compared to being the third one as per the earlier stated valuation. LIC will also not feature in the top 50 companies as per free float market cap, when it could have been the 32nd company in that particular list if the government stayed with the plan of diluting 5% via the IPO. As we come closer to India's largest IPO, let's take a look at what LIC holds in its arsenal. India ranks 11th on life insurance penetration, giving it a huge headroom to grow its insurance market. A protection gap in India is also one of the highest at about 83%. LIC, being the market leader, is very well placed to leverage this opportunity. As we mentioned, what LIC has in its arsenal. LIC has the largest agency network of about 13.5 lakh agents. LIC also has about 3,400 micro insurance agents. LIC also has a wide banking relationships with 72 bancassurance partners, a strong network which is operational in Tier 2 and Tier 3 areas. Coming to the next important question, does size matter? In case of LIC, it certainly does. LIC has 64% market share in new business premium in the industry, which has 24 players. Not just that, LIC has 50% of industry's total agents with itself, and its agency network is most productive in the industry. Interestingly, LIC receives 10 rupees of every 100 rupees of household savings, and with investing those, it owns about 4% of India's equity market and 19% of the government debt. Simply mind-boggling figures. On operating efficiency, LIC has the lowest expense to premium ratio. LIC's operating expense ratio stands at 8.7%. Compare that to private life insurance companies at 12.6% and industry average at about 10.1%. Let's also take a look at some risks around LIC IPO. The corporation's average ticket size is lowest in the industry at just about 21,000 rupees. Going forward, LIC will have to focus on increasing its average premium per policy holder. Speaking about dependency, LIC heavily relies on its agency channel for distribution, deriving 94% of its premium through its agents. Agents are an expensive distribution channel, and to enhance its margins, LIC will have to focus on its bancassurance channel, just like other private players do. Finally, a negative for LIC's policyholders. Bonus payouts will reduce for LIC's policyholders on revision of the surplus allocation policy. Bonus for participating policyholders will reduce to 90% from 95% earlier, and for non-participating products will be cut to 0% from 95%. This may reduce the attractiveness for a lot of these LIC policies.